whatever Dhananjay has cut down in this session, he is part of the panelist, and we'll be taking up all your queries first. Then we have also listed down some 10-20 queries. Depending upon the time permitting, we'll take up them. And of course, he's got his own entire question bank. So remaining, if case studies, if anything is remaining, we'll take up in the question answer, the panel discussion session. Over to you.
Our speaker, CA Dhananjay Gokhale sir, has actually enlightened this session by giving us various scenarios of NPA, how it can be classified, what are the criteria basis which NPAs can be classified in different products, some useful tips how to identify flaws in the system, CBS, and how measures can be taken in a way in case if we have to understand how NPA can be restructured. There are many details which our speaker has presented in the session and in the presentation, and I believe we all will be having many more questions to ask him also, because there are so many litigaties which he has explained during the session. So on behalf of WRC and all the members present here, I'll present a vote of thanks, and I'll request all the members over here to give a big round of applause for our speaker today.
Thank you, Nikita madam. I'll request Mangesh Ghanekar, our regional council member, to take forward the next session.
So we are already running a bit late, and I'll not take much of your time, and we'll start the technical session as soon as possible. So it is a pleasure to welcome all of you on this session for audit of foreign exchange transactions in banks. So we have seen instances in the Indian banking sector where lapses in forex transaction audits have led to regulatory scrutiny and financial penalties. A notable example being RBI's action against multiple banks for non-compliance with FEMA regulations. So all these cases highlight the importance of a proper, robust audit environment, especially for forex transactions. Be it unauthorized forex transactions, forex derivative transactions, where banks were found to be sold complex forex derivative products to corporate clients without proper risk disclosures. So as auditors, we play a crucial role in ensuring that forex transactions adhere to regulatory norms and are free from errors and fraud. So of course, we are not expected to be Sherlock Holmes, and we do not have his magnifying glass. But all we can do and what we can do, we are to be guided by our next speakers. So we have elite speakers today in the form of CA.Mehul D.Shah and CA Abhijit Sanzgiri, who will be guiding us on audit of forex transactions in case of advances as well as other than advances. So may I request CA Ankush Gupta to introduce both our speakers and take forward the proceedings.
Very good afternoon. As our chairman has already informed, we have two speakers and we are running a bit short of time. So I'll give a very brief, short and sweet introduction for both the speakers. One is our dynamic CA Abhijit Sanzgiri sir. He is a CA and a law graduate with over 35 years of post-qualification experience and 25 years of speaking over 800 seminars. So with this short and sweet introduction, I request everyone to please welcome him with a huge round of applause. And our second learned speaker for the session is CA.Mehul D.Shah. He is one of the founder partner of A.P. Sanzgiri and Company, Chartered Accountants, with more than 27 years of assurance with more than 27 years of experience in assurance field. He mainly caters to BFSI clients. He has been a member of Corporate Law Committee at ICI and also in the subcommittee of WIRC from time to time. Friends, with this short and sweet introduction, again I request everyone to please welcome him with a huge round of applause. And before starting the session, we will be handing both of them with a beautiful memento. And I request our chairman Ketan Bhai and Piyush Bhai also to please join for the same. Thank you, Chairman. I'll request Mehul sir to please start. Thank you, sir.
Good afternoon, everybody. It's a privilege to be here at the WIRC of ICI. Would like to thank Ketan Sayya and team WIRC for having invited me to talk on this lecture today. This is being just prior to the lunch session, and I believe today that there is going to be a good lunch which is not in Indian lunch. So just to have that flavor together, Ketan Bhai has kept the session today on foreign exchange transactions. So I'll just go on to the main session in view of paucity of time. Foreign exchange transactions by themselves are very sensitive to currency risks and regulatory changes. The FEMA is a regulatory framework that is governing the foreign exchange transactions. Statutory auditors should focus, as talked about by Mangesh, statutory auditors should focus on the regulatory compliances by bank and how they carry out the risk assessments, because this by itself is also prone to frauds. So, okay, FEMA. So what happens is that the central government, just to give you a brief of how the government monitors the foreign exchange transaction, is that the central government lays down the rules for current and current account transaction as well as compounding proceedings. This better? Yeah. In line with the foreign trade policy. This better? Whereas Reserve Bank of India lays down regulations in relation to the capital and trade account transactions. So FEMA is the regulatory framework mechanism which is driven by RBI to lay down the rules and regulations that are to be followed by banks in relation to foreign exchange activities. You also have the master directions which are issued by the Reserve Bank of India. These master directions are consolidated instructions on rules and regulations related to various activities, and they are framed for one subject matter. You would have master directions being issued covering all regulatory aspects in respect to those areas. So changes in any in any regulations is through circulars and press releases. As of today, there are about 20 master directions. This would be the things that one needs to keep into mind when doing any audit of regulatory compliances for FEMA, because for each area that you would be covering under a branch audit, there would be a direction specific to it which needs to be adhered to by the banks. So what I have done today is, as already discussed earlier, I have going to cover areas other than funded and non-funded advances, which is going to be covered by Abhijit. And I will be covering the areas other than funded and non-funded advances. I will be covering them. These are the typical items that you would find on the balance sheet of any bank. I'm trying to cover those up on the basis of the way the Schedule 3 in the Banking Regulation Act prescribes for the presentation of each item. So you would have on the liability sides deposits, borrowings and other liabilities which will have foreign exchange transaction, and on the asset side you will have cash balances with banks, investments, advances and other assets where there could be a foreign exchange transaction. Now as I understand, at a branch you may or may not encounter all of these items. Nevertheless, I'll just briefly touch upon those items so that if at all you get an exposure to any such kind of a transaction, then we would be aware of those. Right. So on the deposit sides, you would have deposits from banks as well as non-banks. When we talk of deposits from banks, when a foreign bank keeps an account with a bank in India, it's called as a Vostro account. So Vostro accounts can be both current accounts as well as you may also have term deposits from banks being kept with a bank, and the others would be in the normal of a normal deposit accounts by customers, which would be either a current savings or a term deposit account. Again, Vostro accounts at a branch level you are not going to encounter, but I'll just explain what those are. As I told, these are the accounts of banks as well as exchange houses. Exchange houses are typically those which of money changing activities. They help in exchange of currency between the customers and the banks. So they are facilitators for allowing a currency exchange and remittance services. In India, you would have somebody like an Orient Exchange or a WFX Global. Internationally, you may have somebody like a Lulu Foreign Exchange, which will facilitate such transactions. They hold valid licenses to carry out monetary activities. Then you also have, and the special rupee accounts. India, as you would be aware, is trying to push for rupee being accepted as an international currency for doing trade transactions. So you also have a special rupee account scheme by the Reserve Bank of India, where transactions are being carried out between the two the consumers in India and export-import transactions. So in the long form audit report, we are required to comment on whether procedures laid down in relation to maintenance of Vostro accounts have been followed. For these purposes, I would request everybody to, just in case they do encounter such transactions at their level, then follow the Reserve Bank of India guidelines which are laid out in the FEMA. You have the customer deposits. Now, these are the ones which you would normally encounter at all branches. You have various deposits accounts. Some of them are foreign currency. The rest of them may be in Indian rupees. So you have EFC, RFC, the names you may all be familiar with, RFC accounts and others, DDA accounts, which are in foreign currency. Rest may or may not be in foreign currency. Some of them may be in Indian rupees. So the Reserve Bank of India lays down various restrictions on who can open these accounts, what are the transactions allowed in these accounts, what are the interest rates that can be offered in those accounts, permitted debit and credit transactions. So one need to acquaint themselves with the type of transactions that are allowed to be carried out. Apart from that, in the long form audit report also, we are required to comment on whether there are any adverse features pointed out in respect of the deposit accounts by either the Reserve Bank of India or the concurrent auditors. If there are any adverse features which are pointed out, do they continue to persist? And if they continue to persist, what action has been taken upon by the bank at their end? So we need to review those. As a part of that reporting process, what we need to do is pick up a few sample accounts and see how the accounts are being opened by the banks, whether the due processes were followed when opening the accounts. Like you would do for any normal account, you would have a KYC process in place for these accounts also. You would have to know your KYC, you will have to do a risk profiling of customers, and basis the risk profiling, you will have to grade the transactions into the customer accounts into high, medium or low risk. Those which are high risk would be subject to greater amount of scrutiny. At times what has been happening is that compliance with this KYC and AML accounts is that as was pointed out earlier also, these are subject to very fraud risks. So you have to look into the nature of transactions and the account opening forms for new accounts which have been opened at the branch. At times it has come to the notice of Reserve Bank of India that there are fake documentation submitted by the account holders to open an account with the branch. At the same time, even to launder the money, there are shell companies which are formed up by parties to route their transactions from or outside of India. So the task that the banks are supposed to look into is whether they have identified the beneficial owners of account in case of non-individuals, do a risk profiling of the accounts of the deposit holders. Risk profiling is important because the kind of transactions which are carried out in the account vis-a-vis the financial profile and the overall customer data, whether they match or not. We would have been reading quite often that there are a lot of transactions which are fraudulent transactions that are happening, and what happens is that the transactions are routed from such accounts to pass on money outside of India. So if you see a lot of small currency amounts also being parked into this account and then later on being remitted, one needs to at the bank end look into the nature of those transactions if there is anything suspicious reported into them. Banks are supposed to file suspicious transaction report with the FIU of India. So as auditors, we are required to just look into whether the STRs have been filed by the bank and what are those nature of transactions that have happened. If there is anything suspicious or has any financial implications, we need to either take them into consideration or draw our attention in the long form audit report. So we also have to look into the nature of transactions, as I said, which are happening into these accounts. A lot of time, like you would have read about the LRS schemes and other things being taken benefit of by people to launder the money. Recently, there have been, just to give an illustration, there have been fines by Reserve Bank of India on banks where there have been transactions of inward remittances also coming into India and those not being properly reported by the bank. That was one bank, about 30 odd lakhs, which was fined by the Reserve Bank of India. Another bank, a foreign bank, has been fined a similar amount where for LRS, the reporting was not done properly. What happens with lot of foreign banks is that they offer schemes to people whereby they say that we can invest outside of India and the route to take the money from India to outside India is through LRS. Now those products may or may not be known to the customers, but if they are not explained, then Reserve Bank of India has been in the view that this is not done and therefore they have been levying fines on. So okay, now just to there's one more thing is that there are reporting that are happening by the banks to the Reserve Bank of India by way of IDPMS and EDPMS reporting. Now what is IDPMS and EDPMS is that for any transactions that are carried out by the customers through the customs, some information through the DGFT flows into the system. Now the government has been collecting a lot of data. This data is then collated to ensure whether there are transactions being routed properly, that underlying transactions are genuine or no. So there is a system of compiling data at the central level through various agencies, whether it be through the DGFT, through Reserve Bank of India, through the banks. So a link from start to the end of a transaction is now being compiled and facilitated by Customs, Reserve Bank of India, and there was earlier a certification also required from auditors on the transactions that are happening through being fed in by the bank into IDPMS and EDPMS. So one may as well have as an auditor a look into the data which is fed into the IDPMS and EDPMS, whether it's being purpose codes, the nature of transaction, the quantity and value of goods which is there as per the customs document and as per the document submitted to the banks, whether they are being done properly or no. Okay, now I am stressing more on this part because this is one area which is more fraud prone and therefore subject to more risk, and therefore we should also as auditors put more thrust on those transactions. I think I have covered the residential status. Yeah, at times what does happen is that at the banks you may find that for non-resident accounts which are opened, there is no proper system of ensuring that the residential status of the customer is updated from time to time. You may have come across instances even within our groups or relatives that there are people who are working abroad, but their account in India continues to be a resident status. It could be vice versa also. Somebody who's a non-resident has come permanently in India but continues to have an account as non-resident account in India. So do the banks have a measure in place to monitor the transactions, see that indicative things could be there, that there are transactions of foreign exchange happening in a particular account but the account continues to be resident of the same person? So is there a system of, even for non-resident accounts which may have been opened with the bank, if there are non-residents who have come to India and hold a valid passport, and whether that validity of that stay in India has got over or no, and upon completion of their period in India, they should have actually obtained an extension or closed the account. So we have come across those cases where in case of non-residents also, they continue to hold the account in India without a valid passport. So one may look into those transactions. Then there could be things to do with tax compliances. Any outward remittance, as we all do keep certifying, whether the banks also have a system in place to ensure that the transactions, whether tax implications apply on those transactions or no. Some of the private banks I have often observed, they do have a policy of checking our UDIN with that of the institute, but with the public sector banks, it may or may not be there, that they may not be even aware that we are supposed to check the UDIN to verify the genuineness of the certificate which has been submitted to the bank. So we may just look into how good their training is to, imparted to the staff, to see that they are aware of what the rules are and the regulations are. One thing is that there may be certain accounts which are classified as dormant or inoperative. If as an auditor, we should look into the classification status and whether there have been changes between the dormant accounts in the past and as they stand today. If there have been, transfers, what mechanism has been put in place by the bank to ensure that the transactions allowed are in terms of the rules and regulations. Borrowing, this is not something that you would find at a branch level. So I'll skip this for the moment. Other liabilities and provisions. This includes checks and drafts payable, interest accrued, inter-office accounts, and other liabilities and provisions. Now, whenever a foreign currency draft or check is issued, they are supposed to be credited to this account. You may find a mixed system where some banks credit this directly to the nostro accounts also, like in the normal course. While that is also perfectly fine, when we are asked to certify SLR and CRR for the branches, such drafts payable have to be included under the demand and time liability. So if the bank has a system of taking them to the nostro accounts, one has to collect them separately while certifying under drafts and checks payable for SLR CRR purposes. Any account that is more than 10 years old, which is a draft issued but not been cleared, there is a depositor education and awareness funds where anything over 10 years needs to be transferred to them. So one needs to check if the aging of drafts which are not cleared. Interest accrued and due would be on borrowings and deposits. At times in deposits, what has been seen is that for foreign currency, there is a system in the bank to pay the TDS on the deposits and park it separately as an asset, while the interest accrued continues to show in the balance sheet differently. We need to look into how the things are mapped, whether manually or system driven, because there we have again come across cases where TDS and the liability for interest is not linked to each other. So the systems and controls in place for mapping of the deposit, the interest thereon, and the TDS thereon needs to be looked into. Inter-office accounts. Now again, this is an area, while in the branch these are supposed to be inter-branch accounts. This along with any other suspense accounts or inter-office accounts are an area which has been identified to be by the Reserve Bank of India to be prone to risk. Many of the banks have tried to use such accounts to hide NPAs by parking certain funds into the inter-office accounts. As the inter-office mechanism is used by banks to for various purposes. It is not that there is any intention at the head office level, but the reason they would put it into inter-office accounts would be for cash management, management of income and expenses as a transfer pricing mechanism. Just to give you an idea, if a bank has accepted deposits in foreign currency, it would show a negative in its P&L. So as a transfer pricing mechanism, the head office also in turn lends that money to the treasury branch. So they route these amounts internally through a inter-office account. Now you would have read what has happened recently with one of the private banks is that when such funds were taken from the deposit taking branch to the treasury, a mark to market also happened with because these are in foreign currency, you have to mark to market. Now at the treasury level, they would have hedged this foreign currency deposit through a contract. Now if one has to link those things together, then there should have been either no mark to market for internal transactions, or if a mark to market has happened, it should have happened on both the legs. So one leg, if that is not allowed to be automatically flown into the system, then you could end up with either a profit or loss notionally being shown in the books of accounts. Hence, Reserve Bank of India in July 2009 had issued instructions from unauthorized operations in internal office accounts. And even as of today, a certification is going to be proposed for, it was there earlier, but now again we would be needing such certifications that there are no unauthorized accounts which are opened, or if there are transactions that are happening, whether they are under proper authorizations or no. Review of suspense items. Now other liabilities and similarly other assets could have suspense accounts also lying into there. One has to get a breakup of what those suspense accounts are. If there are any items which are unreconciled for more than 5 years, then they need to be fully provided for if there are debit balance, and similarly anything more than 5 years which is in a credit needs to be transferred to a blocked account. Once they get transferred to a block account, there are again restrictions on how to utilize those accounts. So if you see any moment in a blocked account or a suspense account which has been blocked, then one needs to look into the reason and the authenticity of the transaction which has happened. Yeah. Again, the other assets and other liabilities could include, TDS liability, margin deposits. Margin deposits are deposits which are free of interest. Again, against a facility that may have been taken like a non-funded LCBG, you may have a margin kept over here as against a deposit which is earmarked. If it's a deposit which is earmarked, it would be a part of the deposits. These margins are other than interest-bearing deposits. At the you may also have provisions in other liabilities such as those on standard assets, unhedged foreign currency, country risk, derivative mark-to-market. You would have pre-received income on LCBG as well as commissions upfront which are taken on derivatives. Now, so if there are such pre-received income, one has to look into whether the principal amount which is outstanding thereon is also matching with the unamortized portion of the LCBG commission which is lying over here. Many a times this is done manually in banks. With some banks it is automated. If it is done manually, then again there are risks that the principal amount of LCBG would have expired, but over here it continues to be amortized or vice versa. Cash on hand, you would have physical cash that needs to be verified. You look into the control measures as you would for any cash transaction. Again, balances with banks would be those with the Reserve Bank of India. Like you have a Nostro account, what you place with banks outside India is called as a Nostro account. What is kept with you is a Vostro account. So Nostro balances are also again with the foreign banks. There has to be a system of reconciliation with those. At a branch level, you may not come across a Nostro account. What happens is that there is a treasury or a central office at which the transactions happen, and whatever happens in the Nostro accounts are back to back transferred to the branch for the transactions which are carried out by the borrowers at their end. So there are again matters to comment upon in LFAR on Nostro accounts, which again I am skipping because you may not have such transactions at the branch level. Just one thing is that in Nostro there is a concept of value dating of entries. What is value dating is that I'll just give an illustration. There is a export proceed which is received into the Nostro account on say 31st of March. Technically, the borrower's facility would have therefore got credited on 31st of March were it to be on real-time basis. But considering that there are timing differences as well as matching concept which needs to happen, it may so happen that on say 5th of April is when the bank realizes that the amount have been realized. So on 5th of April they give a validated entry saying that from 31st of March this account was settled. So whatever is the interest for the intervening period would also get reversed in the new course. Now if these are of material nature and you find that post 31st of March there are certain overdue bills which have got cleared, one may look into passing of MOCs to say that this account was not actually an overdue on 31st of March. Again depending on the materiality. Yeah. Investments, again I will skip. Banks are allowed to make investment outside of India. They would be into GSECs. But again at the branch level is not something that you would come across. Then we will come on the last slide which is on the other assets. Other assets again would comprise of inter-office accounts, interest accrued and due on lending, investments, prepayments, some deposits. I have already covered inter-office accounts. Prepayments would be again similar and suspense assets and aging which I have covered with the liability side. Just to talk about now general aspects, whenever we look into any items of foreign currency in the bank, one needs to see whether all of them have been revalued at the year-end rates as prescribed by ICA regulation. So conversion into INR is something we need to re-verify. Lot of times we do not get a breakup of each item of the balance sheet. One needs to actually have a ledger wise at the account level balances is something that we need to obtain, because as we said, you would have seen the inter-office accounts, you would not get a balance. But once we get more details about it, we are going to get the breakup from either the region or from the branch. There are many reports which give you a breakup of those items. So one needs to look into it and only then would we be able to ascertain what are the transactions happening into those accounts. Maybe we would be certifying the bucketing for asset liability maturity of all foreign currency assets and liabilities. It's a part of the disclosure of notes to accounts. The general thing that we need to look into specifically would be the exceptions which are pointed out by the Reserve Bank of India if any inspection has happened, the concurrent auditors, internal inspection, whether they have any implication for us as a statutory auditor in terms of either reporting or disclosure requirements. Yes, the general process that we follow is that we do more of a review of the internal controls that are prevalent at the branch office level, do a process walkthrough and arrive at a conclusion on what are the controls in respect of the areas which we deem to be more fraud risk prone. One of those things could be staff rotation, that frequently we need to ensure if people in the key position are being rotated at periodic intervals or no. A lot of data is being submitted to the Reserve Bank of India also through returns. Now what goes into the returns, whether they are manually compiled or automated, needs to be looked into. 15 CB and C, I already covered that. Just to give a conclusion on is that foreign exchange activities are highly regulated. They are very closely monitored by the Reserve Bank of India. Time and again you will find a lot of fines being levied by the Reserve Bank of India for non-compliance of FEMA regulations by bank. We need to focus on the efficacy of the internal control systems in the bank to detect frauds in foreign exchange transactions. So selecting of right sample and collecting of proper audit evidence is of paramount importance. Again, must look into each general ledger balance to see if there are any unusual items therein, including those parked in inter-office accounts or internal accounts. I think I'll conclude on my part. Thank you again for inviting me to talk on this lecture. Now I'll ask Abhijit to.
So the next 10 minutes on advances in foreign currency. So firstly, are we lucky or unlucky that we have such advances in our bank branch? Lucky because that adds to our fees. Unlucky because maybe that's not an area of maybe my expertise and I need to do some homework. And at my age, I procrastinate to read more. Again, does my bank branch have a foreign currency balance sheet? Obviously no. So it will all be in INR in my books. So how do I know whether the bank has a foreign currency advance or not? Obviously I'll ask, I'll put it in writing, and I'll get a representation or a mail confirmation that we don't have any foreign currency advances. Now, there could be a situation where the branch manager has said there could be no foreign currency advances, and we may not just know because at the borrower level, unless we go into the sanction letter and see what has been sanctioned to him, or unless we go into the system and we see there is a foreign currency advance, it could be a foreign bill purchased, a foreign bill discounted, it could be a foreign currency term loan, it could be a foreign currency overdraft, it could be a foreign currency cash credit, and the cash credit could be a packing credit in foreign currency, PCFC, or a post shipment credit in foreign currency. There could be foreign guarantees, foreign LCs. So all of these would comprise my advances converted at the trial balance on 31st of March, at the 31st March year end FEDI rate, and obviously mark to market. So looking at the representation is not enough, the trial balance is not enough, and there could be advances which could be sanctioned during the year or sanctioned in an earlier year, especially a bill purchase discounted, which would be zero as on the date of the balance sheet. So ideally in an LFAR you are reporting on the transactions for the year. So even if on the balance sheet date it's zero, these were transactions which were covered during the year. Now foreign currency advances or foreign currency deposits or foreign currency transactions, there's a separate annexure to the long form audit report which is there. So while that specific annexure would be looked into, if it is advances, it will come under the entire LFAR reporting also, because right from your appraisal to the sanctioning, to the documentation, to the disbursement, to the supervision, monitoring, review, then if then is overdue, then the follow up for the overdue, then your litigation if there is any, and finally if the loan is closed and settled, then the transfer of documents back to the borrower and the closure of the loan account in the system. So the entire end-to-end process for any advance will be similar for a foreign currency advance. The only thing is, while I am distributing funds or disbursing funds in rupees, in a foreign currency advance, the disbursement is in that currency. Finally, it will be from the nostro, and there could be situations where the entire sanctioning, appraisal, documentation would be done by some specialized branch, while the entry could be parked in a particular branch. So while my branch would be having that advance, which could be contributing to my fees, the actual groundwork would be done by some other branch, a specialized branch. And then do I get the chance to look into the appraisal or comment on that, because those relevant papers could not be at this branch. So having made the necessary correspondences and documentation to ensure that this is not in my scope of audit, or then going to that branch and checking the sanctioning disbursement because it comes in my branch, and when there is an advance, the corresponding issue of the revenue with it. So whether I have synced the revenue, so the processing fees, the interest which I am getting, obviously the interest would be differently, it would be earmarked to a different rate. So all those terms and conditions which apply to any other advance, the credit policy, what does the credit policy say about those foreign currency advances is what I will need to see. In a guarantee or an LC, if the guarantee devolves or the guarantee is invoked or the LC devolves or is invoked, then whether I am debiting the normal cash credit account or I am keeping it separately. So all the NPA formalities will also happen similar to any advance account. So there's nothing to be worried about if there is a foreign currency advance. The only difference is that it is in a different currency. So if I've disbursed $10,000, the conversion will be at the rate at what it was on the date of the transaction, and as the rate changes, I'll be marking it to market daily. So if a $10,000 at 83 is 87, technically I have to receive that much money in INR. That would be a mark to market profit. If it's down, I would get that much less money, so that will be the mark to market. Now mostly you may not find such advances in the branch, but then if they are, you will have to do the normal testing, verification of those transactions. Now, how do you ensure that you don't skip anything? So there are those messaging from the SWIFT system, and you'll have various messages, the MT and the MX, MT103 specifically for financial transactions. Now, the SWIFT reconciliation is generally done at a specialized branch of the bank, but there could be possibilities when the SWIFT audit is done somewhere else, the appraisal is done somewhere else, and the parking is done somewhere else. And earlier there were many possibilities of there being a miss, but now post a particular transaction in a particular bank, most of them it is in sync, and you may not find such exceptions, but anyway you will need to be careful and ensure that there is no miss out. And having had an advance in your books, the nature of that transaction as a cash credit, the packing credit in foreign currency is nothing but a credit which is given in foreign currency. It's a credit. It's called by that term. A post shipment credit is a credit once, that packing credit. So the money which you have received for maybe importing a good, and once that good is exported, the PCFC gets converted into a post shipment credit in foreign currency. So PSCFC will be post the export is done, the PCFC is done when the import is done, and whether that flow is correct, and whether the money is received within the due dates. If not, then the rules and regulations for crystallization of those amounts, or the entries, as Mehul said, in the IDPMS or the EDPMS, if import payment is not done within a particular time or the export payment is not received within a particular time, will all be within the purview of audit. So please ensure firstly that there is an advance in the nature of a foreign currency which is appearing in your books converted into an INR. So first is identification that such advances are there, that's the key. Having identified such advances, then the manner in which the appraisal, sanctioning, disbursement, documentation is done, and then the regular follow-ups. So if your foreign currency bill or a foreign currency advance is not received within a particular timeline, if one facility of a borrower is an NPA, the entire facility will be an NPA. And to that extent, it's a export credit. It will qualify for your priority sector lending. So whether the priority sector lending is correctly calculated accordingly is what one needs to see. Finally, the frauds. And frauds in advances, common feature. And there were frauds when dummy imports used to happen and dummy exports used to happen, which especially in case of diamond trades were very common once upon a time. If you have such borrowers in your branch, maybe be a bit vigilant. The ECGC cover will be there in most of the cases. The information, the credit information about the buyers, that means the debtors or our receivables will be there. So you need to ensure that the transaction which has happened is a genuine transaction. The borrower who's there is in the business of exports. The relevant shipping documents or the transport documents for the exports have really taken place and the money has been received. And foreign currency transactions are always a sensitive area because of the fact that we have a weak INR vis-a-vis foreign currency. So the focus on those transactions is there. It's apart from all your RBI circulars, you'll have the FEMA circulars also applying to that. So just be aware of what you need to do. And once you are aware of what you need to do, then how you need to do is basics. Our basic audit principles as we do advances will never change. So whether the advance is given for the purpose for which it is sanctioned, end use of funds will always remain the same. Whether the transaction is genuine is what one needs to see. And whether if there is a packing credit in foreign currency that gets transferred to a post shipment credit, or if in that packing credit there are some rules and regulations which if the payment is not made within a particular time, then there is some penal interest and you will revert back to the normal rates of interest, and the borrowings could be at a certain rate which could be much cheaper. Then there would be cases of external commercial borrowings. There would be the requirement to hedge the foreign currency exposure for a borrower. So the RBI requirement currently anything over $10 million, at least you need to ensure that about 80% of that exposure is hedged. So one needs to comply with all those terms and conditions, and the responsibility, as we talked yesterday on the LFAR, is of the branch management. You just need to be aware of what the responsibilities of the branch management are as relation to those advances, and whether they have done their duties, their responsibilities and their obligations as needed. Anything adverse, if it's becoming an NPA, then the income reversal, the right asset classification and the provisioning will be passed as an MOC and come in my auditor's report. Otherwise, you have the long form audit report to qualify. Just don't miss out on the fact that there could be advances in foreign currency, either funded or non-funded at the branch. So that's the key. Once these are identified, the specific regulations which apply to such advances, both from the Reserve Bank as well as the FEMA, will need to be considered. All other requirements of the LFAR will remain the same. So it's a different audit experience to audit such transactions if they are there. Maybe we are used to handling the routine education loans, vehicle loans, car loans, personal loans, gold loans, or the routine cash credits and the overdrafts or the term loans. Foreign currency is just a different currency. The other principles remain the same. Thank you. I hope no questions. लंच के पहले क्वेश्चन नहीं रहते
नहीं, there has to be questions.
और there are questions I think in the panel discussion you can ask Dhananjay.
Yeah, that is one option. Before we close the session, I couldn't resist myself from telling you about few incidences. He reminded of one of them was, this diamond exports. So, two things, friends. First, go and search on Google Ashok Vihar Bank of Baroda. One of the classic example of, transactions of Hawala which have happened in India, almost huge amount of some 10,000 crore or something like that, where maybe 40, 50 accounts, funds were transferred to Hong Kong and some other countries, and purely baseless transactions. And the branch Ashok Vihar was always under concurrent and always under a statutory audit branch. By and large, my personal experiences in Forex, I don't know, somehow it is a neglected area. Be branch auditor or be it, some other auditors are Forex dekhte hain aur chhod dete hain. And that was a thought process of introducing this entire session on Forex. Even in Union Bank of India, Jhaveri Bazaar, this had happened maybe 15, 20 years back. Around some, good amount, 700 crore or something was transferred by way of Hawala to certain countries in Middle East, where again baseless, no documentation, as rightly touched upon by Mehul. In this Ashok Vihar case, there were not even KYCs of them. See, there are import-export transactions. If the business transactions are happening, number one, you should have IEC code, that is import-export license. It was so funny that those 30, 40 entities did not had proper KYC, did not had IEC code also. So we as an auditor also must understand. See, we certify a lot of transactions of import-export. There are certain documents which the people are supposed to submit whenever they do this transaction of import-export, including bill of lading or bill of entry or whatever documentary supports are required. 99% everything is fine, but some such Ashok Vihar or some such Jhaveri Bazaar may put us as an auditor in trouble. So wherever you have a Forex, make it a point at least you pick up some sample of Forex transaction, be it, purchase transaction, be it export transaction. Look at the genuineness. We were long back, we were doing one of the leading nationalized bank, Sakinaka branch, 100 crore worth of advance given to the diamond exporter. No diamond was getting exported. The earlier auditor was questioned by Reserve Bank of India. Show cause was issued to earlier auditor because the account in the month of February or March was actually becoming NPA. It was restructured. Again, restructuring wrongly done. Dhananjay took some of the issues of restructuring, and maybe in the question answer we can further deliberate upon restructuring, that what should be the level of restructuring. If I am the sanctioning authority and I am sanctioning a particular advance, a lower authority cannot go and restructure the account. In this particular case of Sakinaka, let's say the account was, let's say, sanctioned by, for example, managing director, and CGM is sitting and doing a restructuring. Reserve Bank of India came up with an inspection under section 35 in the month of June, and they said that this restructuring galat hua hai. So they classified the account as substandard. Wahan tak nahi tha. They gave a show cause to the auditor, saying that why did you not look at this, and if the restructuring was not properly done. वहाँ के बाद एक और investigation हुआ, पता चला कि actually there was no genuine export happening. It was just submission of fake documents. Of course, as he said, somebody said, Mangesh said that we are not supposed to carry out those type of investigations, or we don't have lens to go and see unless we are doing forensic. But a common sense should prevail. We should look at the parties' documents which are getting submitted, how they are looking, do they have done proper KYC. So many NRI's accounts are opened. We were doing one small private sector bank in New Bombay. So NRI, NRE, NRO accounts are opened. You need to have documentation relating to his passport, relating to his visa. And if the people have given a declaration coming and said that I am an NRI, his saving account cannot be operated after that. So if you list out small thing in the foreign exchange, I think there will be 100 items which we are as of today as an auditor by and large, as a branch auditor are not looking at that. And somehow, you know, we are engrossed in the audit of advances, we are engrossed in the audit of profit and loss, filling up of long form audit report, और कहीं ना कहीं ये area छूट जाता है. Mindwell, there are specialized branches. He mentioned about category 1 branch, category 2 branch. Please understand your branch is what? Is it an authorized dealers branch? Are they themselves giving rate based on the rate which they are getting from the central office? Or there is a branch in between? We saw in last year itself in one of the nationalized bank, we were branch auditor, where there were two very peculiar things happening. One, the branch which is doing forex transaction for my branch was actually not ID, और वहाँ पे भी कुछ change हो गया था. There was some other branch, and unnecessarily one more branch was getting involved in commission distribution, parking of those funds, reconciliation, everything. There was a mess. Leading nationalized bank under the CBS environment का बात कर रहा हूँ, March 24 audit. One. Second, we saw so many open transactions. Thousands of transactions were open in a separate system. We've seen that happening in couple of banks, in public sector also, recently in IndusInd also. So first go and check the forex transactions are happening where? Are they happening in CBS? What is out of CBS? In this particular case, in the last year nationalized bank, we were shocked. 500,000 crore transaction was shown open in that system. हमने पूछा ये क्या है, नहीं ये हो गया है, तो यहाँ close क्यों नहीं हुआ है? In that particular system, whichever that bank was using. So please look at the separate system if they are there. Are they getting reconciled? वहाँ पे अगर LC open है या BG open है या close हो गया है, यहाँ क्या हो रहा है? अगर open है तो यहाँ income book हो रहा है क्या forex का? Forex income which is transferred from other branch to this branch at the year end. Maximum cases it is not happening. January तक हुआ है, December तक हुआ है. Ask them कि February, March में whatever forex transaction my branch has done through the other branch, commission pertaining to that has come or it has not come. So there are so many, you know, issues in foreign exchange transaction, and I think very important topic and very important session. Thanks to, you know, Mehul bhai and Abhijit for ably leading and dealing this. I thought these two incidents which were there in mind, I will mention. I couldn't resist myself from sharing that. So go and search Ashok Vihar BOB, Union Bank of India, Zaveri Bazar branch, and study them and see to it that no such gross irregularity happens in the branch, where we carry out the branch audit and we are able to save our skin if there are forex transaction. You will have to create a proper checklist. I think he dealt saying that FEMA guidelines we must look at. Please make a checklist. Look at the number of the forms. Naming of the form may differ. Check what kind of form the borrower or the depositor is supposed to submit. What all document they are supposed to submit if they are treated as NRI or they are a borrower in forex. There have been irregularities in PCFC. PCFC का रेट सस्ता होता है, तो लोग क्या करते हैं, PCFC दिखाते हैं तो कितने दिन में रोल ओवर हो रहा है. For example, it is a 90 days PCFC. 90 days में my raw material to final dispatches should happen, and then finally the amount should be paid off from the CC account or a OD account or a normal current account of borrower, or out of the money of the proceeding which are coming. वहाँ पे भी जो हेरा फेरी हो रहा है while transferring this transaction, where they are putting debit and credit, mind well in case of PCFCs, and the tenure, the document of export, document of procurement of goods in case of export. If it is import, कब order दिया, कब material आया, कितने दिन का हमने foreign currency का credit दिया हुआ है. This is very important. So they keep merging the normal facilities with PCFC or other foreign currency because of the rate advantage to the borrower. So please look at those transactions very carefully. I think ably dealt by them, but look at all these aspects of foreign exchange. Once again, thanking you know, the speaker. Ankush is here. Ankush bhai, I think he's gone out. Let me do that duty on his behalf. So Mehul bhai, we are thankful to you for sparing your valuable time and coming over, and requesting all of you to carry it with a loud round of applause. Also, as I said, in absentia, Abhijit is a dear friend, and I, his speech is there at New Bombay at 2, so he's perhaps left. So I was, able to catch him and say that you at least, talk about funded, non-funded. There was an error on my part. Mehul bhai very clearly said that he will deal with the other than funded, non-funded advances, and I had to communicate, but I thought I communicated, but somehow it had remained. I hope that part also is well taken. If not at all, if you have any queries, any questions, you can ask relating to other than funded, non-funded, you can ask to Mehul bhai now. We have some time for question answer. And since Dhananjay is here, again, he is an all-rounder. So if you have any query relating to foreign exchange funded, non-funded, I'll request Dhananjay also to step up and come on the dais, so he can take up a couple of questions if they are there. And relating to other than advances, Mehul bhai can take up if you have any questions on forex. You can raise your hand, probably we'll send the mic to you. नहीं कुछ भी, सबको सब कुछ क्लियर है? लंच टाइम, वो भी पूछता हूँ लंच रेडी है कि नहीं. Fair, good. So I think good to go. And in any case, if you have questions, please you can ask during our last issues in bank audit panel discussion. That's in any case there. Yeah. Please.
I have a question in case of advance payment in foreign currency, for example, advance for import of goods, and bill of entry is not submitted. And as an auditor, so we are supposed to check and report it because there are many instances in the branches.
Mehul bhai or Dhananjay, anybody?